Good evening, traders. Today is November 1st, Friday. It's time to evaluate our portfolio. Let's talk about market a little bit. Yesterday, how you know, market declined more than 100 points. And the most important thing, VIX is jumped up to 2023 approximately. So today is it's retracing a little bit, but not much. Uh, VIX still at 22.2. It's almost 3 points higher than it was on Friday. And we are right now more than 100 points down from the previous Friday. So how our portfolio behaved in this kind of environment? Let's see. Right now, we seeing our total ES futures position. It shows a little bit more than $6,000 in profit. Last Friday it was somewhere 62, 6,300 in profit. So it's a couple of $100 less. Uh, but we compensate that with our oil position, which is right now about $300 in profit. Remind you that we opened that position this week. And our mass position is in little bit loss also because of market decline and most important because of VIX increase. Let's see how it's look like. Uh, yeah, right now it shows uh, about $62 in loss. I remember that previous Friday it was, I believe, about $100 in profit. So we lost here about $150. Uh, but position still safe. How you remember, we will do any kind of adjustment when our shorts will be at delta 20. But here it's still the closest shorts is at delta 14. The same situation with our ES portfolio. Let let me show you uh, what we have here. Uh, if we check it by positions, our A ladder strategy is in good shape. It's has three delta 3 and the our short puts is at delta 13.4, which is far away from our adjustment point. If we check our B ladder, it shows delta 4 also, very safe, and delta of shorts even less, it's less than 10, 9.3 right now. If we go and check our C position, it is right now delta 10.5 and our shorts at 14 delta. Same, I believe, for series D because we have same kind of short puts there. Let's check. It's a little bit less delta, 8.5, and yes, it's approximately 14 delta of our shorts. So how you can see that our portfolio works well, even in this kind of environment, we still not losing. And I hope that next week after election, VIX start declining and our profit will increase. Uh, Also, I would like to mention, guys, again about total delta of our portfolio. I would like to remind you that just 3 months ago, most of you had huge positive delta and no hedges at all. Looks like today most of you has lots of hedges with me, but at the same time you're keeping your portfolio delta around zero, which is, my opinion, is double hedging. So if you will continue to do that, it's not bad right now because market declining, but in general, market is going up. So we have to try to keep our portfolio delta positive. Uh, yes, if it is hard to get positive delta of your portfolio, you can reduce little bit spread of our hedges from 500 to 400. You can sell our short puts a little bit higher at delta 10 or even 11. It could be done different way, but try to keep portfolio delta positive. This way you'll make good profit from this portfolio. You can see it in our case because I try to keep this portfolio with positive delta. It shows pretty good results, even in this kind of market when volatility continuously going higher. That's it about portfolio. Let's see what kind of question do you have. I see from Johnny a couple of questions, which is very interesting. First, can you elaborate on the 10th covers to Sigma's discussion in the strategist income ladder channel? I believe I understand, but OptionNet Explorer screenshot would confirm. Uh, well, guys, if you use OptionNet Explorer, it's kind of easy to set up visually that to see one and two sigma. You just need to right click right on the graph and make sure that you mark use expiration date standard deviation. So if you don't do that, it will be uh, one first and second sigma just for one day for today. But if you check it, it will show your sigmas for expiration of closest options. So you can see that that dark color is a first standard deviation, light color is light blue, it's second standard deviation. It's usually second standard deviation is around delta 5. But I would like to say that we're not going to hold it until and test this kind of point. How you remember, we have to, as soon as our short puts hit delta 20, do adjustments. Why? Because options is a not linear asset, so you can see it from the graph. As soon as it start going down, if we won't adjust it, that loss will accelerate. So we cannot afford to do that. So we have to do smaller but adjustments before that acceleration starts. So I think that delta 20 is a pretty good point. Uh, but just to be safe, I would like to keep it that tent at 2 sigmas. Uh, okay, question number 2. You referenced the value of the total theta to net shorts ratio. Are there other metrics that could provide insights or help manage risk? Uh, Good question. I gonna talk about it in my next balalaika course. But what I would like to say, in August, beginning of August, we witnessed huge increase in volatility, and we had that bad experience. I think all of us, and now we clear an understanding that it's not important at which delta we sell our short puts. All of them become huge problem for our bottom line when this kind of event happens. So easy way to evaluate your Vega risk against this kind of events, just to count amount of your net short puts. But to evaluate different strategies, how they save against this event, we have to compare that amount of net shorts with something good. And something good, it's our theta, it's a source of our income. So if we to compare different strategies, we can use that ratio, just uh, use total theta of the strategy and divided by net short puts, and you will see how dangerous it is compared to each other. Uh, it's very simple for calculation, and I think it's a pretty good tool. We will definitely gonna use it in the future. And yes, all our strategies, because they are calendarized, we're trying to achieve with calendarizing them maximum potential theta with less amount of short puts. But different strategies still have different ratio of that. The most the most dangerous from this point of view is violin strategy, because we have 2 to 3 delta hedge there, plus we add 2 short puts. So strategy itself has 3 net short puts. And the safest one gonna be our balalaika trade, because it's only one short put for total net short put of the strategy. It's gonna be a little bit. Plus, it's has less margin. So we also, to compare strategies, we have to uh, equalize them by margin to compare to each other. But we will talk about it in details on my course. Uh, so far, that's it. This is what I would like to talk about today. Again, I see that lots of people joining our Discord channel, and I invite everybody who watching that video, just come and visit us, see what we're doing, and if you like it, you can join our premium membership, and it's not expensive, uh, just €100 per month. And I think that it will change way how you trade before, and it will be much safer, and you will even enjoy this kind of events which happened yesterday, because we're fully protected. Thank you very much, guys. Have a good and safe weekend. By the way, I am in Valencia and would like to mention that everything fine with me. That disaster happened not far, but it's not in our village where I live. I live about uh, 20 minutes drive from Valencia to the north. Uh, it was pretty windy, but we didn't have much rain at that day, so everything fine. Thank you very much, and have a good weekend, and have a good night. Bye bye.